Good morning and welcome to this interesting ninth episode of Filtered Coffee with Quantace. I'm Shubhada Patil and I'm here to represent the view of SEBI registered RA Karthik Junagadla and the team at Quantace Research. Today we'll talk about Quantace's view on the current market's dynamics, strategic application of risk management, and an exploration of the transformative PM GatiShakti Project. We have a packed session ahead. In the week of recent electoral outcomes and policy continuity, the Indian markets has entered a dynamic phase, characterized by significant cash buying activity. This surge is telling indicator of confidence and speculation among different types of investors. Today we'll start by dissecting these market trends, focusing specifically on who is driving this bullish sentiment. It is the FIIs with their substantial cash injections or the DIIs fueled by robust mutual fund inflows. Understanding the rules of and motivations of these key players provides a foundation for anticipating market movements. Following this, we'll transition into a discussion on why, in this high-stake environment, robust risk management strategies are not just beneficial but essential. The market's current vigor, underscored by aggressive investment and speculative activities, bring with it the undeniable need for a disciplined approach to managing potential risks. With the market clearly favoring buyers, evidenced by a combined inflow of nearly 30,000 crores by FIIs and DIIs in just the last 10 trading sessions, it is crucial to scrutinize the underlying structure of these investments. The resilience of Nifty support levels between 22,300 and 23,400 will be our starting point. Let's delve deeper into these figures and sectoral behaviors to unravel the threads of market dynamics currently at play. As we navigate the complexities of the current market, it is clear that a notable shift is underway. Investors are heavily engaging in cash buying, making a distinct phase of bullish behavior within the market. Let's break down who's driving the wave and what it signifies. In our analysis of the last 10 trading sessions, foreign institutional investors have poured in 15,500 crores into the market, while domestic institutional investors have contributed a close to 14,500 crores. This substantial activity is largely fueled by mutual fund inflows, reflecting a strong market confidence post-election. The SIP book size of mid-24 stands at an impressive 20,904 crores, showcasing a significant uptick from the figure as we saw back in financial year 2016-2017. Turning our focus to Nifty's microstructure, the index shows a broad support range between 22,300 and 20,400, which could be crucial over the next 2 months. The sector poised to benefit most from this bullish trend include finance, non-banks, various consumption stocks, FMCG, and pharma, all of which are showing strong performance indications. A closer look at the weekly options chain places critical Nifty levels at 23,400 with a secondary line of defense at 23,100. These figures are key markers that must be maintained to sustain an upward momentum. However, retail participants have increased their speculative activities, especially in options, which introduces a degree of caution as we approach weekly expires. The surge in retail speculation, particularly around 23,700 level in index options, introduces a potential volatility spike. If breached, we could see an accelerated upward movement in the index due to the gamma effects as retail traders rush to cover their call positions near expiry. Understanding these market dynamics and the potential for swift shifts brings us to a crucial aspect of financial strategy, that is risk management. Given the current market setup, the speculative actions by retail investors are increasing. The importance of having a robust risk management plan cannot be overstated. Let's explore how Quantace Research integrates advanced risk management techniques to safeguard investments and navigate through these volatile times. Amidst the enthusiastic buying and speculative activities we have just discussed, the critical role of risk management comes to the forefront. In the market with strong inflows and aggressive trading, the potential for rapid reversals or corrections cannot be overlooked. Let's examine how Quantace Research approaches its risk management to maintain stability and confidence. At Quantace, risk management isn't merely about mitigating losses. It's about understanding and managing the uncertainties that accompany investment activities. Our approach is rooted in sophisticated simulations and analysis. We employ over 10 billion simulations utilizing historical and Monte Carlo methods to foresee a range of market scenarios. Historical simulations give us insights into how strategies might have fared during post-market conditions, providing a valuable learning curve for strategy refinement. Conversely, Monte Carlo simulations offer a forward-looking perspective, generating potential future outcomes to prepare for unexpected market movements. We focus heavily on minimizing negative tail risk, the risk for extreme loss and that occur at the tail end of distribution curve. Techniques such as value at risk and conditional value at risk are integral to our strategy, estimating potential losses in extreme market conditions. Our risk management also includes rigorous stress testing and scenario analysis. The process are essential to evaluate how investment basket might perform under different and various adverse conditions, ensuring that our strategies are robust and capable of withstanding sudden market shifts while managing market risk internally. It is very crucial. It's also vital to understand external economic initiatives that can impact market dynamics. On such initiative is the Prime Minister GatiShakti Project. This ambitious infrastructure project aims to enhance efficiency and connectivity across the country, potentially stabilizing and boosting market opportunities. As we pivot from discussing internal risk management, let's delve into how the GatiShakti project aligns with broader market trends and what it means for investors. As we transition from our in-depth discussion on risk management, let's explore a major governmental initiative that has significant implications for India's economic landscape. That is the Prime Minister GatiShakti Project. This project is a transformative approach aimed at revolutionizing India's infrastructure through the creation of multimodal connectivity across different transport sectors. Prime Minister GatiShakti aims to enhance the efficiency of cargo movement across the country by developing a network of modern cargo terminals, which will integrate rail, road and water transport. Since its inception, the project has already seen the commissioning of 48 cargo terminals with a goal to reach 100 terminals by the end of this financial year. The strategic importance of the GatiShakti project cannot be overstated. It is designed to reduce logistic costs, improve supply chains, and significantly boost India's competitiveness in global markets. The integration of various modes of transport is expected to lead to faster and more cost-effective transportation of goods. From an investment perspective, the Prime Minister GatiShakti project is expected to spur substantial economic activities across various sectors. Infrastructure development typically brings with it enhanced real estate values, increased demand in construction and material sectors, and potential boost in consumer spending due to job creation. For investors, the sectors likely to benefit from such a massive infrastructure initiative include construction, real estate, logistics, and manufacturing. Furthermore, companies involved in the production of materials required for these projects such as cement, steel and other construction materials are expected to see significant growth. Like any large-scale project, GatiShakti faces a series of implementation challenges and financial risks that could influence its success. Let's explore these potential hurdles more deeply. One of the significant barriers to the smooth execution of the Prime Minister GatiShakti project is the complexity involved in the integration of multiple transport modes. Coordinating such a vast array of stakeholders from government bodies to private companies poses a substantial challenge. The scale and intricacy of these endeavors can lead to potential delays and escalated costs, disrupting intended timelines and affecting overall project efficiency and efficacy. Effective coordination is key to the success of integrating diverse transport systems. However, the potential for misalignment and the complexity of stakeholder interests can complicate project execution, leading to operational inefficiencies and increased administrative costs. Another pressure issue is existing infrastructure constraint. In many parts of India, the rail and road connectivity requires to support the seamless function of multimodal cargo terminals is still underdeveloped. These bottlenecks can severely restrict the operational activities and capabilities of the new facilities, undermining the project's goals to enhance logistic efficiencies and efficacies. Financial challenges also pose significant threats to the Prime Minister GatiShakti initiative. The ambitious nature of this project requires substantial investment, which brings its own set of risks. Building state-of-the-art cargo materials across the country involves hefty financial outlays. While these investments are expected to yield long-term benefits, there is always the risk of delayed returns which can strain financial resources and affect the sustainability of the project. The project reliance on private sector investment introduces an additional layer of uncertainty. Private investors may hesitate due to the high-risk nature of such large infrastructure projects, or they may face financial difficulties that could impede their ability to contribute effectively. The absence or withdrawal of expected private capital could stall the project, leading to incomplete developments, unmet objective. As we conclude our discussion on the Prime Minister GatiShakti projects, it's clear that while the opportunities are very, very vast, the challenges are not significant. For investors and stakeholders, staying informed about this risk is very crucial for navigating potential impacts on the market and leveraging opportunities for growth. Thank you for joining us on this journey through intricate market analysis and strategic insights. Please like, subscribe, and share your thoughts in the comments below. Stay informed, stay engaged, and continue to explore the vast landscape of opportunities with us here at Filter Coffee with Quantace.